Hello, folks. Welcome to Yasumi YouTube channel, your portal to the forefront of technology and innovation. And today we are diving deep into a realm of venture capital, entrepreneurship, estate, and fintech, and touching some stock market as well. Before we begin, if you are new to here, I would like to invite you all to subscribe and hit the bell icon for the latest insights and updates of tech trends I'm going to bring. And it's your support keeps me going. I appreciate accepting my meeting invite today.
Okay.
I hope it's a Sunday and hope you're having your free time and all. Yeah. So Ritesh, so I went through your LinkedIn profile. So I seen that you're a venture capital investor and an entrepreneur, as well as into fintech and global advisor, speaker as well. So as we are going to start today's discussion, I would like to getting to know you a bit with your background and giving a brief introduction of yourself from you.
Okay. So, well, I started my career in the Philippines. I was born and raised in the Philippines, studied, and while I was doing my undergrad and my master's, that's when I built my first company together with a few classmates. Ended up selling it. It was a marketing research firm. Eventually, I got offers to do more of consulting and financial services. So that was between China, US, Thailand, India, UK. Then I ended up a role joining a family office in Hong Kong. So in Hong Kong, that's when things started growing. I was handling family office money, and they had a lot of money. So traditional industrialist family from India, um, they do oil, steel, chemicals, food products, uh, textiles. So big money, and then I was investing for them. When the global financial crisis happened in 2008, we switched from traditional investments like stocks, bonds, into a lot of alternatives. And that's when I started doing a lot of alternative investments. We were even buying horses for race horses for breeding. Then we were buying a lot of uh, foreclosed homes from the U.S. A lot of defaulted loans. So we were looking at these things, and eventually, yeah, we did make a lot of money there when things started turning out again. Around 2010, 2012, around that time. And then I was already doing venture capital investments on my own, smaller amounts, just because I was very involved in tech since I was young. Then later, the family gave me money to invest for them uh, in the venture capital space, and then we made some big investments. Some of which already have done IPO in the US and even in Hong Kong. And yeah, we touch pretty much US, Europe, Asia, and heavily in West Africa because that's where the headquarters of family office is. So we've also brought a lot of tech into West Africa. And then that's when it just started growing because not only we're already a major player, now we're also involved in a lot of alternatives in that space. Then as I was doing it, 7 other industrialist family joined us, pooled the money. Next thing I know, it's a massive fund I'm managing together with 2 other guys from the office. And yeah, just started growing and growing. Then that's when I got invited to Davos to talk. I got traveling a lot for work as well. And yeah, it just grew from there. Then in 2022, I kind of like stepped back from the family office. I mean, I still do handle things for them, but no more active investments from my side. Still handle it. and I joined the U.S. fund. So the U.S. fund is the largest fund. I mean, they're a relatively big fund, and they were the largest investor in Beyond Meat before IPO, and then also over there in that fund, I do a lot of very futuristic investments, things
Mm,
that you won't hear about for the next 5, 10 years, or you won't even see about. Uh,
mm,
we're looking already at space manufacturing, space logistics, 3D bioprinting, uh, lab grown meats, lab grown organs. So we're looking at those things. Yeah. So the
mm.
exposure has grown very big, from very traditional all the way to stuff that you sound very like science fiction. Yeah.
Mm. So I can see, like from your studies and from your family background, you've been influenced uh, to do a lot of things, like lot of trying to pitch a lot of domains and lot of fields. As you told, you're into futuristic investments as well. So starting from the beginning, uh, how uh, how this transition inspired you and what influenced to for you to get into, like, first if we start from venture capital and entrepreneurship,
Yeah.
what influenced you, how your studies, and as a beginner, so that we also can get some idea how inspiration was there and like that.
Um, the thing is, venture capital is a lot of trial and error. So you have to be willing to make mistakes. Don't be afraid of risk. Out of like we have over 100 companies in our portfolio, but out of that 100, about half are either gone or I feel are going to go. And then we have maybe a few that we only have a few that are big, and then some others, we're managing them, we're helping them out, stuff like that. But a few have done well for themselves. But still, those big ones, those that made big, pretty much covered all the money that was invested. So, and it's very hard because there's a lot of variables that consistently change. Like some of the things that we invested in only succeeded because COVID happened, and COVID, is a black swan event. So it was just okay. It was no one could prepare for that, but those companies that we invest in pivoted in such a way that they moved very quickly, because a lot of people are like, no, it's just gonna go by, let's just stick with this. But in COVID, we saw a major shift in the way work was done, and logistics got heavily affected. um, Pretty much, yeah, every aspect of business was affected with COVID, and we have lasting effects now. So yeah, you have to be willing to adapt and willing to take risks, calculated risks, and learn to diversify. Yeah, like they say, it's um, go all in or nothing. But even the billionaires that went all in and made it right, after that they heavily diversify. So they got lucky, or it was just really good timing or something. They took the opportunity, but once they did, then you know they diversify. Yeah, and when you're younger, you have more chances to take risks. As you're older, you tend to focus more on minimizing risk. Um, but yeah, you still can take risk, but it's really calculated risk. Uh, when you're younger, it's very different. Yeah.
Yeah. So when assessing potential investment opportunities, obviously there's a risk as well. As you told, we have to take that risk. How do you balance between early stage startups with disruptive ideas versus more established companies with proven track records? So we have to go. We have a challenge there.
Yeah.
So yeah.
Again, that's a matter of diversification, because the smaller startups,
Mhm.
um, if they're really disrupting a space, it would be very advantageous if you know that space very well. Because let's just face it, disruption is going to happen for every business, every industry. But if you're already a leader or you understand that space, you have to have it in the back of your mind that sooner or later things are going to change. Something is going to disrupt it. But if you're willing to see that disruption and willing to accept it and work with it, that's where you could actually make really good money. Like for the family I was working, import export was one of the major lines, so logistics. And when we saw Lala move, we understood. Because we dealt with that problem in Africa, really dealt with it. So for us, that was a no-brainer. We're like, yeah, we're gonna go for this. We understand this business. Let's invest in this, and we have the resources to actually help. And and that was a good investment. We went in a $10 million valuation. Now the company is worth over 15 billion. So that was a good thing for us. And then there's some industries that if you do understand it better, like if especially if you're working for a big conglomerate or something already, um, there's a business that would understand. But let's say if you like, if you have interest in medicine, you understand medicine a little bit more. Look at those things a little bit more because you can understand better, especially in the disruptive space that's there. That's one. And the other thing is you have to always see that is there a problem that they're fixing or looking to, because a lot of times, yeah, they have great ideas, but is there really a problem? So does it really save money? Does it really save time? Does it make things more efficient? If it's not there, then chances are it won't do really well. And then another thing is you look at the markets that they're targeting. That can make or break a company. Like we had a company that we saw them while they were still in university. They were developing sweat sensors, the sensors that you have in the watches. So these were the guys that were developing that. But the big difference was the ones which they were developing could be sewn into fabric. So there's no alternative, there's no extra device. It's like literally in your t-shirt or your shorts or something, it's already there. But their target was really for construction workers because it would detect dehydration ahead of time. Because one of the founders, their uncle had passed away due to dehydration on a construction site. So that was his main thing. But then regulations don't require things like that for construction workers. And it's very, very, it's an uphill battle to get regulators to approve it. And it's not going to work everywhere. Like maybe a warmer climates like Dubai. But then again, will the Dubai government are willing to put that as a mandate that every construction worker has to have this? So until that happens, it's not really, because you're catering the business, but most businesses will not be willing to pay for that. So the best thing for them was to pivot to athletes. Athletes, people who exercise. You target Nike, Garmin, Under Armour because they're already heavily invested in that. And for them, athletes love to spend money and they love data. And you can see wearables is such a big industry. But these guys were heavily, so the two founders, one wanted to go into that, the other one wanted to go to stick with construction workers. Eventually, company collapsed. But fortunately, they were able to sell the tech to Garmin. However, they didn't make much money because they sold everything. The company collapsed. Two founders couldn't get along, looking at very different markets. So this one for me was one of those companies that it was a good product. Founders were good, but they were focusing on the wrong market. And if you have to look at the market that you're targeting. So if one, you have to make sure it's big enough to make money, and there is a need there or a want. Now it's something that um, like they don't know yet if they want it. That's where you're gonna have to do a lot of market research and um, ask people when you do prototyping. But I mean, when the company does prototyping, that's a little bit more of a challenge. So yeah, because you don't know, like when the iPad came out, they didn't know the iPad, or even same thing with Henry Ford, because at that time people wanted horses rather than cars, and in less than a decade after that, there are more cars than horses. So yeah, those are the tricky ones because those are major changes in industry, right? And yeah, that's the tricky thing. And the other thing, like now, people keep on saying AI is going to replace your jobs, is going to replace your job. That's usually a myth. That does happen, and it happens at every new disruptive technology. So even if you're going to invest, even though people say this, people say that, you have to think more about 5 to 10 years down the line. AI is going to be like the norm. It's not going to be like oh, it's going to be your skill set. So you have to upskill, and it is disrupting altogether. Whether it's venture capital, or whether it be manufacturing, healthcare, in all aspects, it is disrupting. But yeah, like look at the market, look at the founders, see if they fix a problem. I still feel like even if sometimes if we find the right founders, the first company fails, usually their third company does really well. So we would still stick with those founders because there's something about people who are resilient and who keep on going. Even if they might be having the wrong product or wrong idea in the beginning, they tend to learn and figure it out. And maybe that the timing is wrong, their idea is flawed at that time, doesn't fit, doesn't fix a big problem. So, or they're just too early. Yeah, it does happen, and it does happen a lot. So, unfortunately, in this industry, timing matters a lot.
Yeah. So since you talk about this identifying and doing the market research and all, and you have different going to different domains, and you're talking about the diversity. Uh, Given the global nature of innovation in tech and fintech, how important is this geographical focus or the market position when considering the investment opportunities? And do you think there are specific regions or markets that you find particularly good in it with your experience and exposure? I would like to get an answer.
Yeah, so it's very difficult to think globally right away because you don't know if it's going to grow, how fast it's going to grow. Then focus first on the current market. Now, again, if you're already a massive VC, you would have minimum criteria. Like you will not invest in anything below. Like with the company I was working in the US, they don't invest in any industry that doesn't have at least $100 billion target market. So technically, that already means what 70% of the countries are gone from that list. So you'll only focus, okay, you'll focus on the US, you'll focus in China, you'll focus in India. But again, it would depend on the industry. Like if you're looking at real estate, and pretty much, any country is fine. But if you're going to look at in let's say what did we do? We did something in healthcare with male contraception. Oh, that's a very small market if you're going to look at the one country. So we tend to look at the region, Southeast. Like, okay, we do a lot of ASEAN investments. So we're going to look and see how the company will be able to adapt to different languages, different cultures. Because when you're dealing with different markets, that is the biggest problem, what the most challenging problem. Like even with us, when we deal a lot with Africa, it's not only 54 countries; it's technically 300 tribes. And even though the tribes are in the same country, they are still very, very tribal. And it would come down to small details, all the way to the color of the product, the logos, and everything. And you'd be surprised that affects people. This thing psychologically. So you, when you see like, if I see a startup, okay, like someone selling, they're developing something for the phone, and they're looking at only at the US. The US is a big market, so you can find something there. But if it's there and you can see they're only focusing on the Philippines, now unless my mandates are for the Philippines, I wouldn't touch that. I would look at it, okay, if it could work in other countries, I'll see if there's something else in any other country. If it's truly disruptive, like major disruption, then I'm gonna see, can these guys do it in not only in one country but in other countries and other markets. So the market plays a very big factor, and then again, it would depend also on your risk profile. Like with the US company, it's a major investor, it's a major VC. So we don't. But if you're a small VC, like if you're doing it as an angel investor, you wouldn't mind giving a couple of thousand US to something that would be big enough in, like, okay, in the Philippines or somewhere like that. So it depends on your risk profile and your mandates, which you should define early on.
Thank you, Ritesh. And reflecting on your experience, what challenges you have faced, like if you can namely tell us one or two, what kind of challenges from your beginning you
Hmm.
have to face, and how
Chal-
did you overcome them? Yeah.
Sometimes one of the biggest challenges I think VCs um, face, sometimes they have to be the bad guy. I think because, like, when you have companies, especially if you get them early on, as they start growing, you're gonna be the one that has to fire the CEO, and that's very difficult. Um, yeah, like now in any contract that we do or any term sheet that we give, it is stated there that if in the future it is recommended that a CEO step down, you have to step down, let someone else be the CEO. You're still part of the board. You still have a C-level position, like you'll be a CTO or CIO or something. But you have to understand that as a company grows, it's from 0 to 1, then 1 to 10. It's a very, very different skill set that's needed. You created a company, you created an idea, you created a product, you created a service, but then now it's a matter of scaling it up. And not many people have the same skill set for both. So that's where you have to learn that, and we've had a lot of big challenges coming to that, where the CEO did not like it, and it ended up in a disaster. But those are some of the challenges that are faced. And then the other thing is, that's difficult for a lot of VCs is, obviously you're putting money into something, and if down the line it's really not working, you have to learn to, okay, it's time to cut off. You have to figure that out, and it's very difficult. It's very, very difficult to figure it out. Do we still continue pouring money into this or not? So I think those are kind of some of the challenges you face there. The other is just that, another one that I see as a big challenge is, you're not going to know everything. So you have to be okay with not being able to invest in everything, or that you missed out on something. Like, okay, that's fine. Like when I forgot this company in India that was going into space, and now they're the largest contractor of Israel. And when we met them, actually, they were a bunch of university students, and some university students, some guys who had left Israel, set up their own company. So we had a very big chance to invest with them, but we didn't see a major space industry booming in India. Since we already had investments in the US and Europe, we're like, okay, India will be a long while, but it happened. India has its own space program. They're developing really well. They're growing at a very fast pace. So that's something that we missed out. And yeah, it sucks, but you gotta accept it. Yeah, it happened. Yeah.
Mm, okay. So the other one, since were talking about these challenges, since
Yeah.
and risks, can you share any strategies or insights on managing the regulatory of risks in your ventures?
Hmm. The thing is, this industry is very, very high risk. So you have to understand, obviously, with big risk comes big wins also. And that's why this industry is not for everyone. If you have a, if you need to have a growth mindset. You have to be willing to accept that, okay, it's going to be losses after losses after losses for the first couple of years. And then later you'll see something. And that's a lot of hard work, a lot of money, a lot of resources. So you're going to have to plan everything out properly. If you have $1 million fund, you can't invest $500,000 already right away from seed stage. You can't. You're just putting all the risks there, and it's a very big you could lose everything. No matter how much you like the company, you have to have, we can only put, okay, maximum of 20, 25,000, because you have to diversify. That's just the space. That's the way the game is played. And you tend to put, okay, let's put a lot of money here, let's put a lot of money there. When the next round comes, when there's more money needed, when it's critical, you won't have it. So that's one big challenge. You have to plan it on. It's not easy because there's no fixed formula. It changes for everyone, the industry, and everything. Like it's a very tricky challenge to do. And even the company that, both the family office and the US company, they've been in the industry for so long, but it is still a very big challenge, because it's going to come to a point where, like, okay, you're pretty much running low on resources, and one of your portfolio companies needs money. So you're going to have to say no because you don't have enough resources. Or another way to help that is, okay, you bring in another VC with you guys, you help them fundraise as well. So there are ways to handle the risk, but if you want to be the one to save them, it is difficult. And those are some of the challenges that you're going to see as you grow.
Okay, so I can see that you are into different areas. So and you have managed this entrepreneurship with real estate. That's
Yeah.
also one of the key topics, key areas. I would like to get some insights. So how do you intersect these things in your professional journey? How can you manage these things?
Build a very good team around you, those that understand it better than you do.
Okay.
um, with real estate, I don't work alone. Like, I work with a couple of people that understand the business very well, because even if one person that understands Hong Kong is not going to understand Singapore. So if you're going to focus on different locations, different types of real estate, you're going to need different people for that. It is just so fragmented and so diverse that someone who understands residential real estate might have a challenge with commercial real estate. So you're gonna have to build a proper team around that. Especially, yeah, real estate is a very big market. There's so many moving parts. So that's something that you have to build a team around. When it comes to the venture capital side, again, you're gonna have to build a team of analysts and people who would understand not only financials but other industries as well. Because yeah, venture capital is part of finance, but finance is not the biggest driving force to make a company successful. Um, you could even no matter how much you try to do forecasting, do all your analysis and all, it never comes out what what that is. It might come close to it if you're lucky, but it's never going to come 100%. And when most people do financial forecasting or modeling, it's very always very optimistic. It's rare that you can say, "Oh no, okay, we're gonna go under, we're gonna do this, we're not going that." So sometimes you just have to prepare for worst case scenario. What's gonna happen if the worst thing happens? You can, and then again, you're still not sure. I bet before COVID, nobody thought something like COVID would happen. No matter how many scenarios they would think, but no one thought a pandemic would happen. Slow down markets that fast. But it did happen,
Yeah, so that's something I do believe. So in both personal and professional life, we have to think of the worst case scenarios. It
yeah.
might have, yeah. So we have to take the risks and all. And so looking ahead in this real estate entrepreneurship,
Yeah.
what do you see the future trends? See as the future trends, and also how might the factors like sustainability, urbanization, or demographic shifts can influence the opportunities in this real estate entrepreneurship?
In real estate, I think the biggest thing or biggest shift will be fractionalizing. Um, a lot of people, especially this generation, both the millennial and Z generation, they just don't have as much money as Gen X did, and prices of real estate have gone up. So one person, average person, can't afford to buy a house in most places. Um, in Asia, they have the mentality to invest in real estate. So because they believe, a lot of people in Asia believe that this is where we grow in real estate. So with fractionalizing, it's not about buying the whole property, but it's buying a piece of the property, and they're slowly earning from that. Most Asians, or a good chunk of Asians, don't believe in the stock market. They believe it's gambling, or they could lose all their money. So real estate is something they prefer holding on to, because real estate, in 99% of the time, holds its value. It might go down a bit, but it's very cyclical, so it does come back after a couple of years. So it's not really a loss. So that's why a lot of conservative Asians, especially, like to put money in real estate. And now there's not that much disposable income. So if they still want to invest, okay, it fractionalizing in real estate could work. And because real estate is also a very big market, it could work in most countries. You would have your pick. It's like, if you're a fresh college graduate, the first thing you're probably going to look at if you wanted to buy property was a house for yourself. But if you're doing fractionalizing, okay, you have 1,000 US, you can put 100 US in high-end residential, another 100 in agriculture, another high-end in low-cost housing, another 100 in industrial. So you can build this portfolio and then try to understand real estate at a very small scale. And usually when you do fractionalizing real estate, at least the companies that I've seen that are developing these companies, they are doing it in a way that's making a very illiquid investment or a very illiquid asset into a liquid asset class. You can sell your real estate right away on the platform or something. Again, that would depend on the company. So yeah, so that's one major trend I see in real estate happening. And two, another one I see is there's this trend of shifting out of um, out of major cities, going to places and countries where there's a very low cost of living. Like you can see, a lot of people are shifting from the U.S. to Puerto Rico, Bali, these places. Where a 200,000, let's say, if you're gonna buy a house in Manhattan, you're gonna need half a million to a million US, and yet you're still ending up with a studio. When you go to Bali, you can buy a three-bedroom villa for like 300,000 US. And now work from home has just remote work is just growing. Um, Even though like the numbers, if you look at the numbers, getting a salary by going to the office is still higher than doing remote work. Um, it doesn't mean when you put all the actual costs in that you're making more money by going to the office. You actually make more money just by working from home because you're spending, traveling, your travel time. Um, and then studies also have shown you're more, if you're doing especially project based stuff, you do perform better by working from home. But then again, the adverse side of it is that you're losing the social interaction. So that's another thing. So I guess that's why the trend to going to places of remote work like Bali or co-working spaces in places which are cheaper to live in, that's a major trend happening.
Yeah.
Like now, if you go to Bali, you see more expats than locals, and these are all around Southeast Asia. You go to Philippines, go to Siargao, go to Thailand, go to Koh Samui. All these places, you do see a rise of expats coming in, spending a lot less money, but they're a lot more happier. And these are um, millennials and Gen Z that are willing to do it. They don't mind, instead of making 100,000 US while working in an office in the US, paying heavy taxes. They're very happy taking 50,000 and living in Bali. At least they're kind of controlling their work hours, and it's a very relaxed lifestyle. So yeah, and you know, living in the US, you're spending so much just on your basic essentials. When you go to other places, especially Southeast Asia, you live like a king for much less. Yeah.
Yeah. So in our industry software also, like after COVID, during the COVID we had to fully remotely work, and after that, like most of the companies still have this hybrid option. So we can go once a week or once in 2 weeks to the offices. Um and I do had to face some things like there were instances in projects I had to go everyday office, like it was not productive at all.
Yeah.
So then what I did was I was trying to choose a workplace which will give me more freedom in like working from home. That will be effective actually. Effective means like our productivity is very high, that our energy is saved because we waste a lot of time and
Yeah.
time on transportation and all. So as you told, even in our generation, we think like, okay, that getting 50,000 in Bali would be more relaxing than to spend and having some fat lifestyle in US. That kind of thoughts we also have at this moment.
Yeah.
Yeah, thank you for these ideas. And for aspiring entrepreneurs interested in entering this real estate sector,
Yeah.
what kind of advices you can give based on your own journey? And is there any key lessons or principles that have guided you throughout for your success?
In real estate, So real estate is very tricky depending on the region you're in because it's heavily protected by the governments in some countries. So there's a lot of regulations that you're gonna have to deal with, and that's something that you're gonna have to learn to work with. It's a very tough battle working against regulators and bringing in something new because this is really disrupting the real estate industry, not in the actual assets per se, but in the way assets this asset is treated. So you're creating a new asset class. It's the same thing like what happened when derivatives came into stocks, or when the stock market came in to actual company ownership. It disrupted that industry. I mean, it's just, you can't really say it's an industry. It's a way of investing for the industry. Yeah. So you're gonna get those challenges there, and it is an uphill battle. Like I've seen real estate companies going to fractionalizing. It is a very big challenge. But once you get it, again, getting people to understand it is another thing. But we do see that it is people are getting more into it, especially the younger generations, and this is where the money will come. Like 50 years down the line, these are the people who will be doing a lot more fractionalizing stuff. Already, it's happening because like even with Uber, it's a very shared economy. So now you're having property ownership that's shared. Yeah, you might not live there. You're not using it, but you're using it as an investment. And essentially, it becomes the same thing to like the stocks of a company because that is fractionalizing a company. Each share is a fraction of a company. Yeah.
Yeah. So since you were talking about the stock market, how do
Yeah.
you think these innovations will impact the liquidity and the transparency of real estate and stock market transactions, and what benefits do you think will offer to investors and market participants?
Mhm. I think when these disruptive companies come, there will be new investments. Definitely. Now, it again, it's very difficult to find them, especially when they're young. Just because, again, the private space is very challenging. Even to get into venture capital is not easy because you might have the money, but how do you find the companies? It's an industry where you have to be working with someone already in the space or know someone in the space, or you go attend all the conferences as much as you can and hopefully find something that hits big, which is also very expensive in the to attend a conference. Like you're spending 300 US minimum just to go for general pass, and then you have to fly to different countries. So it adds up, and then to invest in a company again, you're going to need what, if you're doing investment alone, you're looking at 30, 40, 50,000 minimum for a very young company, which has extremely high risk. So it is changing the way investment is done, and same thing with real estate. It's disrupting that space. Yeah, I'm. I think I don't know if that answers the question.
Yeah, it answered my question. So just a cross question from you. So
Yeah.
like roughly how many startups? So um how many can I know the number of startups you stepped into, and as a percentage or even fine, how much you could get it successful?
So we've already invested in more than 100 companies.
Okay.
The success rate, now again, it would depend on what you define as successful. Like,
Yeah.
did it go an IPO, or did it get acquired, or is it still alive?
Yeah. Yeah.
So a company being still being alive, after, let's say, 5 years is probably only 30%. A company getting acquired, you're looking at maybe um, 20% of the total. So 30% total for being alive, 20% of the total for getting acquired. Um, Doing an IPO, let's say 10. And those that are truly successful, you're looking at less than five. Some maybe even 1% for, yeah. It's a very low this thing. But that 1% or the 2% is enough to cover everything. All your investment will cover it. But then again, it's a very long process. You're looking at 7 to 10 years minimum. If you get your home run right away, be happy because to get another home run is quite challenging. Yeah.
Yeah. And are there any innovations that you believe will empower a broad range of investors in
Mm,
our fields?
I think space, the frontier space. Just now, you can see like I've been looking at space manufacturing for the past 4 or 5 years now. A lot of new materials are coming out. So new material development. Um, they're able to make things that we only thought possible, or even when or we thought impossible. But now that technology is available, and like one that was always like the holy grail was 3D printing of human organs. Now, if you 3D print skin, it's very easy because it's flat. All right, so you can put layers upon layers upon layers. But if you're going to build something as complex as the heart or even a kidney, there's a lot of layers within layers, but it's three-dimensional. So how do you do that? Because when you do 3D printing, you need to put scaffolding inside. If you're going to put, like, you can't, like, okay, this thing. So when you create the thing, you cannot create the whole thing in one go. You're going to keep the cap separate because when you 3D print, otherwise the filament will drop all the way down. So you can't do it. So what happens is you would create two parts. But if you do it in space, because there's no gravity, you can actually create something with a hole in it, with a void in it. You can do that. Because when you're 3D printing at that point, nothing's going to fall. Nothing's going to move from where you place it. So now you can create a lot more complex um, products. And if you can create something like an organ, there's a lot of tissues involved. So it's not only one type of tissue, but you're doing so many different tissues, different viscosities, uh, different characteristics. So that has suddenly opened up the industry to do that. Like, okay, it's still in. They're doing it already. Like one company is doing it, Space is doing it. But the first product Space actually did is not organs, but it's the raw material for fiber optic cables. It's called Z-bland. So the way fiber optic cables are made, it's glass that's just being stretched out. So when you actually create it in space, in on Earth, because of gravity, there's um, crystallization that forms in the glass. So like the best example that I can show is the transatlantic cable, which connects Europe and the US, which carries the internet. That cable has about 26 or 27 repeaters on the ocean floor. And each repeater costs between 50,000 to 200,000 US dollars. But the repair and to change it actually costs a lot more because now you got to get submersible to go down, fix it and change it. And at those levels, it's very dangerous and really expensive. So that's very tricky. And they can't have one long cable completely because the properties of impedance and transmission, I forgot what's the term, but it's not going to be transmitted all the way unless you have something to boost it consistently. So that's where the repeaters come in. But if you use the orange manufacturing space, you have four times the bandwidth and you only need three repeaters. It might be, yes, like the one made on Earth costs about 750,000 per kilogram. The one in space was 2.1 million per kilogram. But you're getting four times the bandwidth and lesser repeaters. That's there. And then again, because of SpaceX and other private companies, before it cost $25,000 to send up a pound, and again, it's another 25,000 US to bring it down. Now you can get the whole thing done in a couple of thousand, 2 or 3,000 US. You can send something up another 2 or 3,000 to bring it down. So the prices of space logistics has caused a whole new industry to sprout. And there are companies now that are looking at space logistics where they're just transferring one orbit to another orbit, or another one is actually doing repairs in space using machines. Manufacturing, like when you're making carbon-based products in space, like graphene and stuff like that. There's no gravity, so that gravity just doesn't affect. Gravity is a major force that affects a lot of manufacturing process. But now you're doing it in a place without gravity. A whole new industry just opens up. So space, I feel, is very disruptive because
Yeah,
even the initial things are ready. It's coming out with products are just amazing. Yeah.
yeah. Space is something which has made a curiosity in myself as well.
Yeah.
Yeah. So it's a very interesting topic. We can talk for hours and hours even. And so I have two final questions for you. Like, as an investor, entrepreneur, I can see you as a global speaker, advisor. How do you prioritize your roles to ensure they complement take each other effectively? And can you share how each role? I can see you're wearing different hats.
Yeah.
Uh, so, how each of these roles contribute to your overall mission and impact?
So
Just a clear.
if you started as an entrepreneur and then later become an investor, you're going to understand what entrepreneurs go through. So it's uh, it's very good, I feel, if you're an entrepreneur first before becoming an investor. You would understand, the things that go through an entrepreneur's mind, what they need to deal with. You've had the experiences, so you can actually talk about it, and you would understand that, okay, when you make investments, this is how you would look at it. So that's one. Like it's very challenging for a VC investor if they have never been an entrepreneur. They would think, oh yeah, I give the money here and that's it. But that's one thing I think it's good if you've actually tried to start a business. It doesn't have to be successful. Even if it's failed, you're going to learn a lot. Or work with a startup. Because when you're doing that, you're naturally wearing a lot of different hats. And then later you become an investor. You're going to see things that even the entrepreneurs themselves don't see. Because you're seeing it from an outside perspective and you already have a little bit of that experience and added knowledge. So that brings a lot more depth to it and a lot more understanding. And it just helps that you're getting some, like, for the entrepreneur especially, it's going to help that there's something from the outside looking in, knowing that what the entrepreneur is also going through.
Mm, yeah, thank you. And yeah, so thank you very much. And as we are going to conclude today's discussion, like I didn't even feel that we have spent an hour. So, what kind of final piece of advice would you give to the viewers who are like just beginning or who are in the field of this venture capital or the entrepreneurship? or the real estate?
For venture capital, I think look at things like AngelList a lot. You'd find some hidden gems there, and that is if you're gonna, you want to go to markets that you're not in. But if you're um, in your own locality, try to look for problems that you see.
Mm.
There are problems that exist, or it's not done efficiently, or you'll try to figure out something that's disruptive there, and then try to find a company that's trying to work on that. That's where you start small, and then as you grow, the market size obviously grows. Um, because remember, it's not only tech. You could be investing in anything. So even a coffee shop, just creating a better coffee or doing things differently, changing the atmosphere. It might be something very small, but um, even the big companies started small.
Yeah.
So I think if you're gonna start something, look at those things around you first, because locality matters a lot. Even big investors, they try to stay in a certain area easily. That's why you see, like, most of the major VCs, they have their headquarters or offices in Silicon Valley or San Francisco, and that's where most of the disruptive tech companies are. Just because you're in the locality, and what tends to happen is just the way it happens psychologically is that all the certain companies tend to stay near each other. It's just humankind, yeah. And I'm sure wherever you are in the world, you're gonna find like the Silicon Valley of this country, because they would all tend to be close to each other. And those are where you'll probably find something to invest in if you're a little bit big already. Yeah.
Yeah.
And to be an investor, you don't need to go through a certain qualification or something. You're like, okay, I want to invest in you. And that's it. I find something interesting in you and I want to invest in you. That's all. Unless, you're becoming big, where then you would have to be an accredited investor. That's where you do need to have at least $1 million worth of assets. But most of the time, the smaller ones, you can be anyone.
Mm.
You know.
Yeah. So thank you very much, Ritesh. It was so inspiring. And can I know, like, in how many countries your businesses are expanded?
Mm,
Mm,
it's a lot.
okay.
So the companies that, like, let's say Lala Move is already the whole of pretty much everywhere in Asia. They're in
Okay.
a few countries in Africa. They're in the US now. Then the other one that became really successful is that we invested in was Palantir. So
Okay.
Palantir, but they deal with government, so they're also spread across the world. Um, Most of them are within the Asian region.
Okay. Not in Sri Lanka, right?
No, not in Sri Lanka. No.
Okay. 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 So it's very honor for me to connect with you and to conduct this discussion. And there's a lot more we can discuss. So I guess I will get some future time slots also from you,
Okay.
uh, based on your free times and all. Because these all the topics like fintech, real estate, entrepreneurship,
Yeah.
I can talk one topic for hours. So yeah. So thank you for giving me this opportunity to connect with you. And wish you good luck in your future investments as well. Thank
You
you very much,
luck to you
Ritesh.
as well. All right. Take care.
Take care. Have a nice day, dear.
Bye.
Bye. Thank you very much for joining our insightful journey through venture capital, entrepreneurship, tech-driven landscape of real estate, and also we were discussing all these things. And thank you very much for watching my video. If you found today's discussion enlightening, be sure to give us a thumbs up and subscribe to my YouTube channel, tech YouTube channel Yasumi, for more in-depth explorations of tech, innovation, leadership, all those things, and some awesome content is lined up with some NASA scientists, Forbes contributors, UN coordinators, and the change makers, and some more powerful impact and impactful investors like Ritesh. Yeah. So thank you very much, and drop your comments below if you have any topics on your head you need to explore with me. Until next time, keep exploring and embracing the future of technology. This is Yasumi.